American Express over the 1 year has worked. Look at that, 55%. Nicely done. And even the 5-year, man, looks great. For a while, it was kind of flat, but not anymore. It's done really well. Market cap, 222 billion, revenue 60. And Visa and MasterCard reported very good reports. Analysts think this American Express is priced at a premium. They have a 20 PE. The revenue, very good revenue growth, 9.3%. They have a big number. Let's see here, total revenue, 60 billion. I mean, that's a big number. So that's very good growth. Go American Express. So their free cash flow, very good free cash flow. And profit margins, good profit margin. I don't think they're showing me a gross margin number, but that's a good profit number, 16.4, very good profit. So 17 billion, they're growing at 9%. I mean, I could argue this is a discounted stock. They have very good cash. A lot of cash, 10 billion of debt, yeah. I mean, this thing is probably like 20, 30% discounted on cash, free cash flow. And what are analysts expecting out of growth? So analysts expect it to keep growing. Yeah, this is a good, solid value stock. This thing is, I don't expect it to go down. And, you know, these American Express, Visa, MasterCard, they just keep going up and to the right, very consistent. These guys, so based on free earnings per share, analysts think it's a little pricey because it has had a good year, but it's kind of deserved, right? Good revenue growth, good profitability, good free cash. Warren Buffett owns it, low dividend. So you really want to see this stock appreciate, continue to appreciate. If we have a downturn in the economy, especially the higher end consumer uses American Express as well as businesses, and those services, I mean, for the last 2 years, right? Stocks have been doing great. Companies have been really profitable. So American Express is doing great. So if we have a downturn in the economy, these guys will take a hit. I'm not expecting that in 2025. So this one isn't a bad value play, good value stock investment. Let's take a look at in a chart. And compare it to Visa and MasterCard. So these stocks have traded together, but American Express has won the battle of the charge card, credit card business. Look at that. What a beautiful chart. Oof, very nice. Over the 5-year, American Express wins that battle. So American Express is where the money is at. I guess this Warren Buffett guy really knows what he's doing. Very good looking stock. What do you think? Huh?
I have a question. I see, I mean, now that you brought up all the 3 companies that, you know, talking heads and people, YouTubers are saying that there is concerns that all these businesses will get impacted or affected negatively because of the crypto, and the transaction will start to be, the crypto will eat their lunch to some degree. I don't know. What do you think?
I also have concerns about this space, but not necessarily because of crypto. One of my concerns around American Express, Visa, MasterCard is you think about Amazon, right? You know how like Federal Express, their stock tanked because Amazon said, hey, we're going to do more of our deliveries. And half of the volumes that American Express was doing with Amazon are going away in 2025. That's huge. Like, wow, we just lost a lot of business. So when we look at payment systems, Amazon. So when somebody uses a Visa gets a piece of that. Traditionally, it's been 3%. But I'm sure Amazon says, no, you're not going to charge me 3%. We're so big, you're going to charge me 1% because we have that type of leverage, right? If you don't work with us, we'll just accept MasterCard or we'll accept, you know, something else.
I want to comment, Victor. I think that there is a misunderstanding. The 3% is not cut by Visa, by the company. It's cut by the issuer, by the bank. Visa itself get much less. I don't know how much, but it's a small portion. Yeah, go. Sorry. Yeah.
So I'm trying to keep it simple. I agree with you. If JP Morgan issued out that credit card, JP Morgan and Visa split that traditional 3%. I agree with you. And they offer, so I agree with you. But the point is still the same point, which is, okay, so Amazon, what if Amazon at some point said, you know, like my household, hey, Victor and wife, you guys, I don't know how much money we spend on Amazon. It's tens of thousands, right? If you just link your bank directly to Amazon Prime, we're going to give you 0.5% back. Whoa, wait, what? Yeah, I'm on board. How do I do it? Done. That's one of the risk items, right? That's easily done. No crypto involved. I just link my bank. I know Amazon. No problem. I have a lot of my vendors linked that way. Like my wife has a business. Most of her business transactions, like ordinary bills, they get paid automatically. Well, why couldn't I just have the same thing with it? Amazon, where they just debit my checking account. Done. They're happy. They lowered the cost of doing business because they don't have Visa in the mix or American Express or MasterCard. And how much volume is that, right? Amazon's $600 billion of revenue. Walmart, another big retailer. If Amazon did that, yeah, Scott, great seeing you. Take care. So if Walmart did something similar, I think that's the future. Because why do you need Visa, American Express, and MasterCard? This paradigm was created way back in the day when, the 1960s. We didn't have internet. We didn't have anything like it. So people would show up with a charge card and they would, they would charge things, and it had this, you remember Nkiter, you'd have this like device, and you'd put your card down, you put a piece of paper over it, they'd run a roller over it, and then they'd have an imprint of a
Yes.
charge card.
Yeah.
That was the model. That's the model that we're trying to use today. You have a credit card, it has a number, and it's the same paradigm. Paradigms go away. And when that paradigm goes under attack, the other thing that's attacking it is buy now, pay later. These companies like PayPal, and I forgot the other one, they're offering for big ticket items. Hey, you buy that television, you buy now, pay later. It's a pre-organized cost to the merchant. So you're Costco and you say buy now, pay later. I know that a $2,000 TV, I'm going to get the money right away, but I'm going to give up 0.5%. And that 0.5% is what PayPal, or I forgot the other company's name, they get that money, and then they have the relationship with the person that needs to pay them. That's a threat to American Express, Visa, MasterCard. So those things, as we go into e-commerce and we get further into e-commerce, their value, Visa, MasterCard, American Express, their value goes down. They're just not needed. They're not a necessity anymore. So that's the biggest risk that I see in the space. So far, that hasn't been a problem. Just ask American Express stockholders. So that's like a big picture thought that I have. But to this point, it's kind of like whatever. It's the stocks have done really well. Are you thinking of investing into American Express, or are you an investor?
I'm an investor in American Express since.
Good for you.
Yeah, actually, what, more than 2 years, 2.5.
Good for you.
Yeah, I have it. I mean, it's double since May 22. Yeah.
Good job. Nicely done.